Okay, guys. I think I will use a phone to record this. The reason why I usually use phone is because I want people to understand that you can actually do any kind of analysis on any device as long as you understand the concept of looking left. By looking left, I mean most of the information you will need are already in the past and the present for forecasting. You use the past to judge what will happen in the future. Okay. So, but I usually use phone for two reasons. Reason number one is not everybody that actually wants to trade forex that will have a phone at a laptop or a computer at first, right? Then on the second note, what if you are trapped somewhere you cannot have access to your laptop? Does it mean you will not be able to trade? That's why I use a phone most of the time. Then that aside, I will prefer to use a laptop to do most of my analysis. Then I can come to phone and be able to go from there, right? But then let's use a mobile phone so that we can see how easy it is to be able to do most of this analysis. A simple thing that anyone can do. Okay, so I'm going to be analyzing Euro JPY, Euro USD, and there are two things that I want you to take note of. Number one, we'll be treating the concept of supply and demand, how to draw a high value, a high risk to reward supply and demand, a quality supply and demand. Okay. Then after that, I'm going to make another video where I'm going to be talking about the concept of liquidity. Now, after doing your demand and supply, you still need to understand liquidity grabs, because most of the supply and demand are going to be doing, there will always be a liquidity grab, because like a high or the low of uh, the low of the chart that we're going to be taking. There are sometimes that price have been driven down a little bit before price start going back towards the opposite direction. Okay, so those are liquidity graphs. So I'm going to teach you how to draw a good or a profitable supply and demand first. Then I'm going to explain the concept of liquidity grab. Then you can combine both and be able to actively trade this market. Okay, so here I'm on trading view. That's where we make most of our analysis, all right, not on meta 4 or meta 5. The reason why I can make on meta 4 meta 5 is because you can't really see the big picture or the real picture of what you are looking at. Some people use that, but then I prefer trading view. Then after making my analysis here, I can go to meta 4 5 and take my trade. Okay, so now I'm going to add two symbols. Okay, Euro USD, two symbol Euro USD. Okay, so from FCM, from Wanda. Okay, now I have two Euro USD here. One is from FCM, the other is from Wanda. Both of them are still okay, right? But then the reason why I'm using this is because one, I will use the first one to analyze the areas of supplies and demand. Okay, then I'm going to use the second one to talk about liquidity grab, right? Okay, so let's remove the drawing on the, because I actually made certain drawing. Now the first thing I want you to do is do me a favor. Go to indicator and install this. Go to indicator plus indicator and search for sessions by Boytuki. That's the one you are going to be using, by Boytuki. Click on it. Now the reason why I use session is because you see, when you are trading a currency, you need to understand the particular session that currency will have is high volatility. Okay, so for example, now London session and New York session, Euro USD has high volatility, but in other sessions, let me show you. Because I actually removed the other session only to put only London and New York, right? Now the other sessions, this is very important for you to understand. The other session, you will notice that there's not much volatility with Euro or USD. Let's take this session for example, Sydney and Tokyo. You can see the volatility was low. But look at London, look at New York. You can see the volatility is high. You don't want to trade during Sydney and New York because Euro USD will not move. The only time Euro USD will move, the number of pips it moves will be London and New York. So those are the two times you are going to be trading this currency. So I'm going to be trading Euro USD, and I'm going to switch off all other time zone or sessions and leave only London and New York. Okay, leave only London and New York. Now with London and New York, you can see how, and let me remove Sydney as well. London, New York, Sydney. Okay, with that you can see how prices are reacting during this period. Now we don't actually need this in this phase of our in this phase that we're about to draw. Okay, what we need is to draw equality supply and demand. Okay, now the first thing you need to do is to make sure you have a trend line in place. Connect two dots and draw a trend line. The third touch of a trend line is always the powerful one that gives this thing a move. Okay, now you can't draw a trend line on a 1 hour chart. You go to a daily chart to draw a trend line. So let's first thing first, draw a trend line. Okay, so if we look at this, we can see this is an uptrend on a daily chart. I'm going to turn my screen. Okay, I'm going to turn my screen into a landscape mode. Okay, turn my screen to a landscape mode in a minute. Right, I'm going to turn my screen into a landscape mode. Okay, now the first thing first, as I said, I'm going to draw a trend line. Now I'm going to go to the recent part of this diagram and draw that trend line. Okay, my trend line is going to connect. This will be my first touch, this will be my second touch. Okay, all right, first touch here, then second touch there. So the third touch of this trend line will determine if I'm going to buy this, but the third touch must fall at a supply or at a demand zone before I decide I want to buy. Okay, now I have my trend line in place. I'm going to lock this. Lock meaning I will not be able to move it either by mistake or whatever, by any design. Okay, so I'm going to lock this. All right, now the next thing I'm going to do also is to look for another place I can draw another trend line. Okay, this another one here. Second touch, first touch. The first touch here. Second touch here. Okay. Alright, we just broke out of the trend line, so we know exactly what's happening here. So I'm going to lock this as well. Lock. Okay, good. The moment we broke out of this trend line, we had a retest and price shot up. Okay, so now on a 1 day chart, that's where we start our analysis from. Okay, now the first thing I'm going to do is I'm going to look for an area of supply. An area of supply is the last red candle. If I'm looking for I'm looking for area of demand, if I'm looking for area of demand, I'm going to draw it from the bottom, right? Then I'm going to look for the last red candle before the major push up. Last candle before a major push up. Okay, what I mean by last candle, last red candle before a major push up. What I mean by last red candle is I'm going to take that candle and I'm going to draw a rectangular bar across it. Okay, now the one we are looking for here is this here, this one right here. Okay, that was the last candle before the major push up. Okay, so I'm going to take this, put this here. Now I'm going to color code this because I'm still going to go lower to do more. Okay, so I'm going to use red color code this into red. I'm using RGB, so I will know red is day, green is 4 hour. Green is 4 hour, then the black will be RGB, right? The black will be for 1 hour. Okay, yeah, we are still going to go lower. You need to do this only once, and that's all. Okay, so what I'm going to do is this: drag this to this point, drag this to this point, right? Then we drag this to fit. It's not going to be easy, right? You have to be a pro at this. It took me some while to be able to master this. Now we have signaled that one out, right? So I'm going to lock this so that we'll not be able to move it, right? Good. Now what this simply means that we are expecting a reaction when price gets to this point. We're expecting a reaction when price gets to this point. Now, to be able to see if this actually works, we are going to use an horizontal line to draw a line across so we can see price touching that horizontal line on both sides, coming down from up or coming from below to touch that line and have a kind of reaction. So I'm going to use a horizontal line with the same color code, which is red, to see if I can get something of that nature. Here, take a look at it. Price touched that line and reacted off it. Price touched it as well below and reacted off it. Okay. Now we go towards. Always look at the left. Now we can see we still need to adjust this. I'm taking all the wicks and the entire thing, all the chemical voodoo, and you can equally see that it actually matches where our supply, our demand is, right? So I'm going to lock this. Now this is a hotspot. Before we can decide if anything is going to happen, there must be a break of this support, then a break of this. But then if it does not, if there's no candle that closes outside this, I usually use 1 hour to make my analysis. If there's no candle that closes outside this on a 1 hour chart, I still believe that price is going to go up, right? Right, good. So we have our first area. Now we're going to go upward to find the next place we're going to be drawing, which is, this is our demand zone. We're going to look for a supply zone. Now on a supply zone, the last green candle before a push down, that will be our supply zone. Last green candle before a push down. Now I'm going to take this. I'm going to take this one here because that's what I see, the last one. But this time around, this will be the entire thing. But the reason I'm not going to take this is because we have another one just here. We have another just here. So I'm going to use this candle here. So what I'm indirectly saying is this. I'm going to put this here like this. I'm going to use the length of this candle. The length of this candle here. And the wick of the other candle there. Okay. The wick of that candle there. The other way I can do it is just put it here, right here. Or the green this way. Here. Okay. So I'm going to snap it to it. Yep. Just go a little bit up. Yeah. Okay, we have lock. So we have a demand zone and a supply zone set out already. So what we are saying is we are expecting price to get to this point and have a sort of reaction downwards, or we are expecting price to come to this point and have a sort of reaction upwards. Okay, so we are in between zones here right now. Then secondly, we could still draw another here, but I will not take this, except I will not actually take this one. Or rather, let's just leave it this way. It's better for you to have bigger space, but then because the 1 day chart, yep, we could still have another zone here. Okay, so let's go there. I'm going to do this here as well. The same thing I did just now here. Okay, snap it to this. Right, I'm going to lock it. So what I'm expecting is if price get to any of this, okay, you can see price got to it and reacted exactly from that spot. So I will not use this anymore. I'll be using this one at the top because price has already reached this. So the next time price is going to come to this place, there's every guarantee it may push past this and get to this before reacting downwards. Okay, now we have like 3 already drawn. Okay, we are okay with that. Now for you to know or have the full confidence that price may get there and have a sort of reaction, we must have seen price got there in the past and has another sort of reaction there. Okay, so we're going to draw an horizontal line here and see if you take a look at this, you will see price touching it here as well, then touching it from under here. So I'm going to lock this. This will be what we call a support and resistance kind of line, right? So I'm going to do another for the one here. As you can see, we still need to adjust this a bit. So we do that. We need to adjust this a bit. What I'm looking for exactly is price reacting both side, both ways, up and down, okay. All right, I think we have it. So we'll lock this down. Now on the 1 day chart, we already have all what we ever need for turning points. Okay, we already have what we ever need for a turning point, where price reach, react. Now we have this on the 1 day chart. Let's turn the phone this way and see how it looks, exactly how it looks like. Okay, a minute, see exactly how it looks like. I'm going to move this. Yeah, auto fit. So this is exactly how the entire thing looks like. But for what you can see, you see this is a big kind of bar. Each of these bar we just drew just now, we see it's a big kind of bar over, let's see, this is over 52 pips. Too big, right? So then we will have to come to a lower time frame. Okay, a lower time frame will now be like of 4 hours. We do the same thing we did not too long on that as well. Okay, same thing we did not too long on that as well. So what we're going to be doing is also draw out our supply and demand zones. Okay, so it's basically the same thing, but this time around we're going to color code this into green. Code this into green so that RGB, right? So you know anytime you see this, you know this is a 1 hour, this is a 4 hour time frame. Okay, so something like this, then like this. Okay, now I've made it smaller or better. Snappy shot. All right, so I'm going to lock this. Lock this, go up again and see the last candle. Move down. Okay, which is this. Make sure you get the entire thing. Okay, I know a lot of people want, you think you can't do it with a phone, you can't do it without your phone. Yeah, you can do it without your phone, without a laptop. But you must really be committed. Okay, that's the reason why a lot of people can actually not do it. You must really be committed. Like, not, this should not be an excuse that I cannot treat because I don't have a laptop, right? As I said, having a laptop is an added advantage. Okay, it makes the entire thing easier for you actually. So I'm going to lock that as well. So indirectly, for me to have a high probability trade, I will wait for this setup to play out. I'm going to wait for this setup to play out, meaning if price get to this place on a 4-hour chart, you can see how many pips you are going to get. If price get to this place, we are expecting it to come down to this way, and this is over 502 pips. You see, high quality trade, 502 pips, and you can just have like maybe let's say 50 pips stop loss in place. As I told you, I'll still give you, I'll still explain why you need to have more stop loss that will come outside of this box in place for you to understand what I mean by liquidity grab. There's always a liquidity grab that happens every day, okay, every single day. Because here is how it plays. A London section, a Asia section will get to a point. London section come take the liquidity, and London section get to a place. The New York section come take the liquidity. Unfortunately, a lot of people think liquidity grab happen in the section itself. No, it happens when one section ends and another one is in place. For example, now London and New York, Asia and London, they intertwine, right? But the liquidity grab itself occur after Asia end, and London alone is in session. Liquidity grab occur after London ends, and New York alone, a section alone, section. You first take out London liquidity, which is the highest or the lowest, before start moving your way. Okay. Now we have this on a 4-hour. Now you can also do this for 15 minutes to have what we call which I believe you should do as well, to have what we call, in case you want to enter, a sniper entry. A lot of people take their entry from 5 minutes, 1 minute to have a sniper entry and a better risk to reward, right? So, but with this, you can have 502 pips on the one lot. It's about $5,000. It's about $5,000, right? So you risk like $50 to get $5,000. Not really bad. You risk like $500 to get $5,000. Not really bad if it goes your way. Or if you decide to do $50, you risk $50 to get about $500. Not bad as well. Okay, so this is how you do all your setup, have quality setup. Now it's important that you remember that this should be done. Leave the past you use in just getting your spot right, but the present is what you are mainly focused on, which is this place. Now what you'll be looking out for are 3 things. Number 1, you are going to be looking for candlestick pattern, and we can see one here, which is evening, evening star, meaning price about to go down. But then the reason why we may not take this is because we still have a high that needs to be taken here. Okay, if this high is not taken, I will not really take that one. And we still have another high. So the best place to buy this or to sell this from would be at this point. The second best place is this, and sometimes price may not actually get to this place, or it may get there. It may just be like a week into this area before start coming down. But I will usually wait for this. In case I want to enter this trade, I will use the lowest lot here, 0.01 or 0.02. If I want to enter through here to 0.01 or 0.02, but depending on if liquidity is taken or not. If liquidity is taken around here and liquidity is taken, yeah, I will enter the trade. But if liquidity is not taken, I will wait for liquidity to be grabbed first, and if it is at this point, I take my entry and target the lowest point here, the lowest point here, or the lowest point at this point here. Okay, so that's how to draw, because we have wasted a lot of time. So that's how to draw a quality supply and demand on longer time frame. You can do the same for 1 hour, do the same for 15 minutes. Okay, the more you do it, the better for you, because now you can have a lot of points where you can be taking profit from. Take profit 1, take profit 2, take profit 3 along this line. Okay, so that is that. I hope you enjoy this version. So when I come the next version, the part 2 of this will be the concept of liquidity graph. Okay, thanks for watching.